So I'm trying something new. I want to give you guys some live updates on what rates are doing, what the market's doing, and all things commercial loans. So this week, one of the things that I want to update you guys on is declining markets. That's what I've gotten back. On one of our appraisals, I got back that we are in a declining market. Kenny, my husband, who does residential, he's also seeing some appraisals come back showing declining market. So we are starting to see that appraisers are saying San Diego is in a declining market. What does that mean for you? Loan-wise, it's not going to hurt you, but it is kind of a signal of a shift in the economy, which we all knew was coming and have been feeling was coming. So that is a new kind of shift. So I anticipate seeing maybe some appraisals coming back a little bit lower than we would have otherwise anticipated. So we're already starting to adjust our expectations based on that information. But this is where we're at, guys. So in terms of rates, it is no surprise that rates are up. But what we're seeing right now is rates kind of in the mid fives range, around like for $1 million+ loan amounts. I do have rates as low as 5 1/8 right now, but those are conservative loans. So give me a call. Let's see what we can do if you have a scenario. But just know those are our absolute best rates right now. They might also be lenders who are a little bit more conservative. So if you need the most aggressive deal, come to me and I can tell you what you qualify for. That said, all of the talk right now with everyone, which has been the talk, is what's the Fed going to do? We all know that they've said they're going to continue to raise rates. Yes, I do believe that's going to happen. But what are they going to do in November? So a lot of the experts I'm watching are thinking that, yes, the Fed will raise rates in November, but maybe instead of doing a 0.75% hike, they'll do a 0.5% hike. Why is that? Well, the news about the UK last week pretty much shook the Fed. They had an emergency meeting about it. So if you weren't paying attention to that financial news, basically the UK's pension, some of their largest pension funds were about to go under. They were literally going to close their doors. So then the UK stepped in and essentially bailed them out. They said, okay, fine, we'll buy government debt so that these pension funds don't go under. That was really scary because the Fed is willing to let us lose jobs. They're willing to allow the housing market to go down so that way we can have a more normal market that's not so competitive. They're willing to do all those things. But what don't they want? They don't want like another 2008 financial crisis, which that was the signal from the UK is, hey, we almost had a massive financial crisis. We're bailing out the pensions. This could be a signal of something coming in the US. Maybe there's something lurking that we're not paying attention to, and we don't want that to happen. So I think the Fed is going to scale back a little bit on the rate increases, and we'll see what happens in the future. I think a lot of our predictions are that rates are going to start to go down later in 2023, possibly early 2024. So my big piece of advice for you guys is please do not freak out and start running toward a 10-year fixed. Why? Because you're going to regret it in 2 to 3 years from now when rates go down and you want to sell or you want to pull cash out or you want to do these things. Because remember, you're getting rates today that are conservative, that lenders are scaling back, being a little less aggressive. You're getting a higher interest rate, which means you're qualifying for less loan dollars. So in 2 to 3 years, when that changes, you don't want to be handcuffed to your rate, your 10-year fixed rate that you thought was going to be the best thing you're ever going to see for the next decade. And lo and behold, rates dropped again like they have the last 4+ cycles. So guys, nobody's ever become a millionaire by panicking. So please don't panic. And we'll see you next week.